All right, let's get right into it. We're going to unpack a really fascinating European court case that tackles what seems like a simple question, but one that has some massive financial consequences.
This, right here, is the heart of the whole thing. It seems pretty straightforward, doesn't it? But for one nonprofit in Latvia, the answer to this question turned into a huge legal battle. And believe me, it ended up redrawing the tax map for similar organizations all across Europe.
And this is the number that makes it all real. We're talking about almost 200,000 euros. That's a mix of back taxes, some pretty hefty fines, and tax refunds they were denied. All of a sudden, that blurry line between being a charity and being a commercial operation becomes incredibly sharp.
Okay, so let's set the stage. The year is 2016. We've got a Latvian nonprofit, the Information and Communication Technology Association. They take on a couple of big training projects funded by the EU. Now, the association is managing everything, but they hire other companies, subcontractors, to do the actual teaching. They paid those companies, including VAT, which is, the standard consumption tax in the EU, and they fully expected to claim that tax right back. Sounds like business as usual for a nonprofit, right? Well, the Latvian tax authority had a very different idea.
What's so wild here is how two different groups can look at the exact same situation and come to completely opposite conclusions. The tax authority basically said, look, you're a nonprofit. You're just a middleman for EU funds. This isn't a real economic activity, so you don't get to deduct the VAT you paid out. But the association, they came back swinging, saying, whoa, hold on a minute. We are registered for VAT. We were the main contractor here, and using subcontractors is how business gets done every single day. We absolutely have the right to get that VAT back. And that clash, right there, is what kicked this whole thing off.
So, with the local courts pretty much stumped, the case got kicked upstairs. Way upstairs. It landed on the docket of the highest court in the European Union, the Court of Justice. And their job was to settle this thing once and for all. The Latvian court managed to boil this whole complicated mess down into three crystal clear questions. First is what the nonprofit is doing even in economic activity in the eyes of the law. Second, if you hire somebody else to do the actual work, are you still the one supplying the service? And third, does that big chunk of EU grant money count as part of the payment when you're calculating the tax? The answers to these questions were going to set a huge precedent. So the court gets the case and gets right to work. But what's interesting is they didn't answer the questions in the order they were asked. Nope, they rearranged them to build their argument logically, piece by piece, starting with the most practical question first. This was their starting block. Remember, the tax authority argued the association wasn't the real supplier, since they didn't do the teaching themselves. The court had to figure out, for tax purposes, who was actually providing the service to the customer at the end of the day.
And the court's answer was a big, unambiguous yes. Their reasoning was simple. Because the association was acting in its own name, it was their name on the contracts. They sent the invoices. They were legally the supplier. It didn't matter who they hired to do the legwork.
And this quote just nails the court's logic. They're saying that if you send an invoice for a service, then you're providing a supply of services for consideration. That's the legal term for a paid gig. Using subcontractors? That's just an operational detail. It doesn't change the basic fact that you made a deal with the client.
All right, next piece of the puzzle. We've established it's a service. But what's it worth for tax purposes? The client's only paid about a third of the cost. The rest, that big 70%, came from an EU grant. So does that public money get counted as part of the payment? And once again, it was a very clear yes. The court ruled that when it comes to VAT, it really doesn't matter who's footing the bill, the customer or a third party, like the EU in this case. If the money is directly linked to the price of that service, it's got to be included in the taxable amount.
So the key phrase here is payment obtained from a third party. The court is saying this wasn't just some general donation to the nonprofit. No, this subsidy was paid specifically for the training services being provided. And because of that direct link, it has to be counted as part of the total value.
And that logic led them straight to the final, and really the most fundamental question of all. Now that they'd established the association was supplying a service for full payment, could a nonprofit even be a taxable person doing an economic activity? This was the entire foundation of the tax authority's argument.
And for the third and final time, the answer was a resounding yes. This was basically the knockout punch to the tax authority's case. The court made it official. Just because you're a nonprofit, that doesn't automatically get you a pass from being treated like a business for tax purposes. This right here is probably the most important sentence in the whole judgment. The court is saying loud and clear, your legal label as a nonprofit doesn't matter. What matters is what you do. If you are out in the marketplace providing services for payment, you are carrying out an economic activity. Period.
So, the verdict was in, a clean sweep for the association. But let's dig a little deeper. Why did the court rule this way? What are the principles here that basically created a new rule book for nonprofits everywhere?
It all comes back to this one definition, straight from the EU's VAT laws. An economic activity is, well, it's pretty much any activity where you're supplying services. But look at that last part. That's the kicker. Whatever the purpose or results of that activity. The law itself says it doesn't care if you're trying to make a profit or save the world. The only thing that matters is the action itself. And the court laid out exactly how the association's actions fit that definition perfectly. Look at this list. They weren't just sitting back and channeling money. They were actively finding clients, hiring people, sending invoices, checking on quality. They were, in every meaningful way, competing in the open market right alongside for-profit training companies.
So, one case about one association in Latvia has now set a massive precedent across the continent. So what's the bottom line? What are the real-world lessons for any nonprofit, any project manager, really any organization that deals with public funding in Europe? Okay, let's just boil it all down. First, your nonprofit status is not some kind of magic shield against VAT. Second, if you get public money that's tied directly to a service you provide, that money is part of your taxable income. Third, hiring subcontractors doesn't let you off the hook. If you're the main contractor, the responsibility is yours. And finally, the ultimate test is just this. If it walks like a business and talks like a business, the tax authorities are going to treat it like a business.
And that leaves us with this final lingering thought. This ruling sent shockwaves far beyond just Latvia. It's forcing thousands of organizations that mix a social mission with market activities, to take a hard look at how they operate, how they're funded, and what they owe in taxes. That nearly 200,000 euro question got its answer, but you can bet the consequences are still unfolding right now.